Hey traders, Raghee here, and in this update I'm going to follow up on something that we've been talking about for a couple weeks now here in the videos at the Simpler Trading YouTube channel, as well as in Charts and Coffee, which you haven't joined me yet for the pre-market show we have right here at the Simpler Trading YouTube channel between 9 and 9:20. Come join me for Charts and Coffee. This will be an ongoing discussion, but let's root this in what's happening. And the question that I get a lot of is this: Rog, does earnings matter? And the reason I titled this video, Earnings Simply Doesn't Matter, is because the macroeconomic forces that we watch that are the most impactful have nothing to do with earnings. Earnings are really a byproduct of a lot of other macro forces: monetary policy, dollar, growth, jobs, inflation. Those are the main pillars. Earnings would then be affected by those. So earnings really are not going to affect the broader economy, truly. They're more a reflection of it, right? Remember, these are the previous quarter's earnings, so they are a lagging look. And are they going to necessarily help propel the market higher? Not as much as what I'm about to show you. So let's take a look today at the target rate probabilities, and I'm going to show you some setups in the bond market. Oh, as well as, we'll take a look at the euro as well. Take a look at what's happening with target rate probabilities. It's gotten very simple, gang. If you want to know what CPI, PCE, NFP, GDP, any of the alphabet soup of macroeconomics means to the economy, means to the stock market, means to index futures, look at the December 14 meeting date for the FOMC and look at the probabilities for where the target rate is going to be. That means that by the time we get to December, the expectations are that we will be at 3.5 to 3.75%. You can see that here by the 350 by 375 basis point column. This is what's being factored in. This is what we quote unquote know. This is what it's most largely expected. If this is where we top off as we go from December to February, still at 3.5 to 3.75. We go from February to March, right? Still there. This is where we're topping out. This is very important. Where we're topping out and when we're topping out. Notice we're not topping out in November, right? This is the November. This is 325 to 350. So when we top out and where? Gang, this is how easy it is to understand macro. Macroeconomic rate of change. If this is what we know, and as long as one of those NFP, GDP, CPI, PCE, as long as none of those change this expectation, we are putting in a bottom in the equity markets and likely in the bond market as well. But I told you about the equities 2 weeks ago. Check that video out. It's called The Light at the End of the Bottom. I walked through a lot of the reasons why this bottoming process has already begun and cited things like the target rate probabilities. Now let's head on over to the chart. If we're not expecting higher than that in terms of percentage, the percentage at which we're going to see the Fed stop at, then chances are we're not going to continue to see higher yields in bonds. We may chop around a bit, but we're likely not going to see higher yields in bonds. So the idea is the most immediate trade would be a quick fade off of this Darvis resistance, just probably about halfway down into the range. What we are waiting on, and it looks like it's really starting to set up because the momentum has gone bullish. Momentum precedes trend, gang. Momentum has gone bullish. Trend is still neutral. So in a neutral trend, the near-term momentum is starting to get bullish. If that persists, the trend will also then go bullish. So this is what we're looking at: a neutral market trend and a bullish momentum. Once that goes double green, we can go right into buy the dip. And it does look like that's the direction in which we're heading. Until that happens, we're going to take advantage of overbought shorts, and we can start talking about oversold buys. So as the bond market gets down into the support of this area here, we can start looking at TLT with further dated options to take advantage of that eventual transition. As long as this is neutral and preferably the slow stochastic is oversold, right? There's just simply no easier way to take a sideways market, recognize that, and then look at the lower end, the support end of the slow stochastic, and then look for that to coordinate. That's what I'm looking at on bonds. By the way, I don't want to neglect the US dollar. Even if bonds start heading higher, we have the ECB this week. I am looking for another opportunity to short euro, which is the same thing as saying buying US dollar. They have almost a completely inverse or negatively correlated relationship. If we can get a spike, nice move higher on the 6E, that will be a euro, US dollar, 6E, or even the FXE ETF. We can get bearish there. If you have access to the dollar index futures or you want to play the UUP, that would be a buy the dip. So FXE or euro futures, short the rip. UUP or DX futures, buy the dip, right? So same trade. It's really pretty much the same trade. Not nearly, because UUP then reflects also the British pound and the yen. And by the way, the pound has got an even better downtrend than the euro. So for those of you that are comfortable with 6B, pound futures, or FXB, if we get a rip higher as a US dollar weakens and maybe the pound sterling has a session or two of strength against it, keep an eye on this one here too. Lots to like. Yes, we're in a bottoming process. Process takes time. We want to continue to confirm and reconfirm what's happening. You now know where to confirm it. You now know how to decode the narrative in the simplest way. This is it. All right, gang. I'll see you all in Charts and Coffee, 9 a.m. at the Simpler Trading YouTube channel. Be good to each other, and I'll talk with you soon. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.